Welcome to Market Movers, where we identify market-moving headlines and discuss ways to either hedge risk or create exposure in affected assets. We have Scott Martin.
Hi, Jim.
So another big week of headlines. We have potential vaccine news. We have earnings that have come out in the form of bank earnings, and we have more calls for shutdowns from some states that aren't doing well in handling the virus. Which is the biggest one?
Well, today, Jim, it's the vaccine. And if you look around the landscape, it's several companies that are having some very positive vaccine news. So in my opinion, stocks, especially the ES and NQs, want to see some progress on the vaccine as far as phase 3 trials. We're getting that, and we're getting a lift in equities.
So if we look at a post-virus world, do you expect a trade where you'd pit the Russell against the NASDAQ as a catch-up trade from stay-at-home stocks to venturing out stocks?
Yes, I like the catch-up idea, even from a valuation perspective. The only caveat I would throw in there, Jim, is in a post-virus world, it's in my opinion, as we've talked about on Market Movers previously, that the yield curve is going to start to steepen. So how that affects small caps is certainly something to watch as that catch-up trade is on.
Okay, so the CME offers the mini contract in Russell, NASDAQ, Dow, and S&P. They also have a micro contract in each of those and a weekly and monthly options. Also, big launch on Sunday, August 30th, where the CME launches options on the hugely successful micro contracts. Initially, they're just offering them in S&P and NASDAQ. Scott, do you think this is a big deal?
It's a huge deal, Jim. And as an investor and a trader, it allows me to more precisely round out or hedge out some of the positions I would have on overnight as economic headlines come through, or certainly headlines come through on the virus.
Completely agree with that. Okay, on to metals. Silver has seemed to welcome the vaccine talk more than gold has. Is this because of the industrial component of silver? If not, what is it?
It's a little bit of a catch-up trade, I believe, between the two metals. Gold has outperformed silver for the last several years, and the fact that we're starting to expect some better than previously seen, let's say, economic data coming in here, Jim, which would at least lend itself to more industrial demand and therefore more demand for silver.
Agreed, and I am long silver, as I have screamed from the mountaintops. If you're interested in the gold market, don't miss the CME's webinar on gold futures and options, opportunities for active traders on Thursday, July 16th, at noon to 1 p.m. Currently, the CME has the contract in gold and silver. They also offer micros in both and weekly and monthly options in both. Okay, 10-year yields haven't budged at all. At what point in time are we going to see a recovery, a risk asset curve steepening?
I think relatively soon, Jim. It depends on the economic data that comes. Yes, it depends on what Fed stimulus comes forward. But as the economy starts to get some footing again, I believe you're going to see a general re-steepening in the yield curve and therefore downward pressure price on ZN, upward pressure on yields.
Me too, but it's getting so long and waiting for it. But I agree. I think we steepen at some point in time too. Thank you for joining us on Market Movers, where we are helping to make you a better trader.